That it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
They're sharp. They help you get the maximum value for your money.
Market should be too worried.
I can hold on for the next
growth will be phenomenal.
Buy with a stop loss of
It is positive for the
It's
stock.
a marquee stock actually.
valued
I would possibly wait for the next
Definitely buy it.
And they are the superhero of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
5:30 Eastern. Also, the cash burn. How much money is the company burning through right now? And as you take a look at shares of Tesla, keep in mind it's been under pressure because people are wondering, will they have to bring down their delivery guidance? We get the numbers in about 15 minutes or so.
All right, Phil, thank you. John Ford, is it more about Qualcomm or Apple in this report?
Exactly, Bill. EPS is a question mark. Qualcomm consensus, 81 cents EPS on $5.8 billion in revenue. That's right in the middle of the guidance range that Qualcomm gave on the top line, the penny above on EPS. Normally, Qualcomm might be getting a bit of a boost from iPhone 10 anticipation since pre-orders of that high-end phone have been boosting component makers. But overhanging all Qualcomm earnings is continuing spat with Apple over how much Qualcomm should get in royalties. For the core health of Qualcomm's business, you have to look to QCT, its chip business, which isn't really affected. EPS is the wild card here since the licensing business is highly profitable, Bill.
All right, John, thank you. We'll see you at the top of the hour as well. In the meantime, as we head toward the close, the Dow's up 52 points. We have the closing countdown in just a moment. Stay tuned.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan investment strategies.
Your stocks at these times, only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, brought to you by Fine Cure Pharmaceuticals, Nanolia, and Biba.
Stolen some of the thunder from the end-of-year typical traditional rally. Remains to be seen. And, you know, today we were up 140 points at the open, and then things started to fade pretty quickly. We're up about 53 here at the close. The best performer today in the Dow was Intel. Boy, that thing has just found a new gear and continues higher. It was one of the strongest stocks in the third quarter in October, and it is now starting off November very strong. And Apple down today. That is the weakest component in the Dow for this first day of November. The 10-year note for the second day of November. 10-year yield is at this point now continuing to move lower, but we pointed out earlier that the 5-year to the 30-year the spread is about 83 basis points. That's the narrowest we've seen in about 10 years. The dollar index continues to creep ever higher, highs on the DXY. We'll see if we can continue to move higher there. And then oil moving off that 8-month high that we set just yesterday. Bob Pisani, we got a slew of earnings coming your way here.
Advanced decline line is actually flat on the day, and that's a little worrisome. I do not like the fact that the Russell's down 0.8% and the S&P and the Dow are up 0.2%. That's a 100 basis point spread. That's a little unusual. I'd keep an eye on that. It's only a one-day trend. I think the important thing right now is we are seeing very good volume today in the winners. So technology ETFs are continuing to get very large inflows today. And another group that's been doing better recently, oil and gas companies, exploration and production companies. These ETFs are doing better as oil's been over $54 and the earnings have come in. Better capital spending discipline is really helping these companies. BP's been up this week on its earnings report. So we're clearly seeing people chase the winners right now.
Gains, but no records. But stay tuned. Lots of earnings coming your way on the second hour of the Closing Bell with Kelly Evans and Company. See you tomorrow, Kelly.
Thank you, Bill. Welcome to the Closing Bell, everybody. I'm Kelly Evans. Here's how we're finishing up on Wall Street today. It looks like gains across Canada, South Korea, and Germany also hitting all-time intraday highs. There you can see some of the performance today. Of course, we didn't quite carry on that momentum, but we're about to get an earnings whirlwind, and we have our reporters standing by to cover all of these bevy of results. Julia Borston on Facebook, Phil LeBeau on Tesla, John Ford on Qualcomm for us, Josh Lipton on GoPro, Kate Rogers looking for Shake Shack and Cheesecake Factory, Seema Modi on Kraft Heinz, Fitbit, and FireEye, and Aditi Roy is watching for Yelp. Holy cow! We'll see everybody in just a couple of minutes. Thank you very much. Joining me on the panel today, we have CNBC Senior Markets commentator Michael Santoli. Sarah Hunt is here. She's portfolio manager at Alpine Funds. And so is Kevin O'Leary. He's here. I mean, not at Alpine Funds. He's chairman of O-Shares ETFs, of course. It's great to have you all here. And Kevin, you were saying that this is a you're cautious here. You got Facebook, you said they better blow it away or else. Tesla, you're expecting it to be, a lot of risk here.
Here's my thing about Tesla. If it walks like a duck and talks like a duck, squawks like a duck, it must be a duck. It sounds like a car company to me. It says production problems. It's got market share issues. At some point on one quarter, I don't know if it's going to be this one, Kelly, one day you're going to wake up and say, wait a minute, why am I paying infinite PE for a car company? It's not like they don't have competition. It's not like BMW's not spending billions chasing them, GM doing the same thing. When that happens, it is going to be a very painful day. And I don't know if it's this quarter, but I'm telling you,
Tesla, by the way, has been through, go back a couple of years, they had a 50% correction in the stock before it's got, they've had these concerns, Michael, before, and it reminds me a little bit of WeWork when everybody says this needs to be a value real estate company and not like some sort of social.
Well, look, Tesla is down 16-17% from its recent high, so it definitely has, I think, run into some friction when it comes to these production problems. I think this is a market that it's so rare to have a non-earnings-based company that's really going to the moon like Tesla, that clearly the market sort of sees it as something of its own animal.
When does gravity strike, Mike? When does gravity strike?
Look, it's a crowded short already. The bear case is very loud and out there, and I think basically people think of it as a call option on some kind of grand future. And I'm not saying that's right, but that's how it's being treated.
We know, Sarah, there are bloggers out there who go and try to count the vehicle identification numbers on Tesla Model 3s to figure out just what the production number is. But after it disappointed so big in their last quarter, that's where really do comes in.
Well, you got a combination of that, plus is that going to cannibalize the more expensive cars? And in the end, again, you're talking about such low production numbers for such a high market cap. It is hard to justify that. It is much more about the story and what else comes out of this and what else can he do, I think, more than it is about a car company.
Kevin, they make batteries, right? I mean, they're trying to put the power wall and get in Solar City and it's energy.
I love the product. I don't love the stock. It's that simple. And I think the car is the best of what it does, but at some point, if you think about what the multiples are for really long-term car companies, and they're going to have to compete with GE and BMW and everybody else, Toyota, Kia, you name it. When that PE gets applied to Tesla, it's a 40, 50, 60% correction. That's all I'm saying.
By the way, Facebook's 10 times the market cap of Tesla. A lot less drama about the results, a lot more important to aggregate portfolio.
I mean, the interesting thing about Facebook is that it has just kind of cranked along here. It's never had the concerns that Twitter has had over the gyrations in its
money.
The first 8 months as a public company, it had those problems.
We're talking about how much in profits this year for a company like Facebook next year. I mean, billions and billions. It's a very
15 to 20 billion pre-tax. I mean, it's a lot of money.
Wow. And so that's what you're saying. Kevin, it's not just.
I think the trend continues. Digital advertising platform, I think the numbers are going to be great. I'm just suggesting if they weren't great, it would be a big correction for the tech sector. This is one of the pistons. Amazon, Facebook.
But what does Facebook have to do with Amazon per se?
I look at it this way. When you start thinking about digitization of there's no question Amazon disrupting a lot of businesses. I was just over at Plated celebrating the acquisition of Albertsons. We were shooting that, and we were talking about how much has changed in only a matter of 12 months. Look at what happened to Plated stock, or Blue Apron stock, hit a new low.
Right.
I mean, the whole world is looking at the digitization. So I'd say great pistons, Amazon, Facebook, Alphabet, but most of them make money.
Most of them. Sarah, what do you think about the valuation? These are companies that have had a monster year.
Well, I think that to the point of who's actually making money, if you're growing that fast, you deserve a premium multiple. I think the question is, if you don't put up a great quarter, if that growth looks like it's slowing at all, what does that do? But right now, I think the momentum is all in the favor of that digitization, and certainly you're seeing ad dollars move there, and you're seeing user growth, and all those things point to higher prices, basically.
All right, well, the earnings are starting to cross. Let's start with Qualcomm. John Ford has those numbers. John?
Kelly, we're seeing a revenue of $5.91 billion, EPS of 92 cents. That EPS EPS number higher than the street had expected. The guide is to a range of $5.5 billion to $6.3 billion. That's a midpoint for next quarter, or the current quarter, I should say, fiscal Q1 of $5.9 billion. The street might also be happy about that. There's been a lot of nervousness over how Qualcomm's profits will shake out since Apple stopped paying licensing fees. As you might recall, in previous quarters, last quarter specifically, Qualcomm CEO Steve Mollenkopf said they're just not going to count on revenue from Apple or its suppliers when it comes to that at all. And apparently that guide and that expectation has led to the expectations and the consensus being pretty accurate as opposed to a lot of the noise that they were seeing. So right now we are again seeing $9.1 billion on the top line, 92 cents non-GAAP on the bottom, Kelly.
John, thank you. Qualcomm shares are up about 1.5%. Is there anything to say there?
Well, no, I think that it's all going to, what happens with Apple is going to be what matters to Qualcomm longer term, and we just don't know what the determination is yet.
All right, Facebook earnings are out. Let's get straight over to Julia Boorstin, who's covering those for us. Julia.
Hey, Kelly, that's right. We see Facebook beating on both the top and bottom line. Facebook reporting total revenue of $10.33 billion. That's versus expectations of $9.84 billion. And what's meaningful here about this revenue is that this shows a revenue acceleration. Facebook's revenues were expected to slow to 40% revenue growth, but they actually are showing total revenue growing 47% per year. So that's notable to show that acceleration. EPS also looks like a significant beat. The company reporting earnings per share of $1.59 versus estimates of $1.28. Now, I want to really quickly hit on DAUs, daily active users, 1.37 billion. That's a hair stronger than expected. That's a 16% increase. Monthly active users were 2.07 billion as of the end of September. That's also a 16% increase. Mobile advertising revenue represented 88% of ad revenue. But here's the key thing here. Mark Zuckerberg saying, our community continues to grow and is doing well, but none of that matters if our services are used in ways that don't bring people closer together. He goes on to say, we're serious about preventing abuse on our platforms. We're investing so much in security that it will impact our profitability. Protecting our community is more important than maximizing our profits. So you see this, this is a company that is beat on the top and bottom line. The stock is only up less than 2% after hours, perhaps reflecting these comments here about how investing in protecting the community will impact profitability. We don't have any more details on how much capital expenditures will increase. We surely expect to hear more of that on the earnings call, which starts at 5 p.m. Eastern. So very interesting here to see Facebook outperform, but also give that warning. Back over to you.
Julia, thank you. Michael, the shares are up a little less than 2% right now.
And at an all-time high, I will say. So, yes, the market was positioned for a beat. I think probably not a beat of this magnitude. You were seeing whispers in the, high 130s per share. It came in, well above 150, 159. I do think that there's going to be a perception tug of war here about what Zuckerberg said, about whether it's really going to impact profitability or if we're talking about gestures and these kind of measures around the edges that maybe don't really restrain the profitability of this network in a meaningful way.
For all the focus on the advertising figures at Facebook, here's what they just reported in the quarter. It was a huge beat relative to expectations. The advertising revenues, Sarah, were over.
It's brilliant, and blaming really the politicians for making him do that. I bet you hiring a few thousand people to weed out fake news and Russians and whoever else is playing with the game.
But that is a big number relative to their total headcount is what, 17,000?
But bottom line is it's nothing compared to their earnings.
If each of the 4,000 costs $100,000, $400 million, it's a lot of money, but it's not that big in terms of talking about how fast they're growing revenue per.
Is it possible, though, that this is the peak of the growth? When their ad revenue is up 50% year over year, total revenue is up 40%.
I think it keeps going. There's no reason. This platform is so effective, so measurable, so useful to small and large businesses alike. And if we get tax reform, there'll be more capital available of Russell 2000 companies to use it. This thing could keep going for another couple of years. But I love the way he pulls down expectations. It's brilliant. Always blame the politicians for all your problems. That's what I say.
That's what I do. GoPro earnings are out. Let's get those quickly with Josh Lipton. Josh?
Kelly, GoPro reporting EPS here of 15 cents. That's versus expectations of 2 cents. Revenue $330 million versus an expectation of $314 million. But this Q4 guide, Kelly, is weaker than expected. EPS guidance here of about 42 cents versus an expectation of 57 cents. And the revenue guide is for about $470 million. Analysts have been looking for $521 million. And that 2017 guidance looks a touch weak as well. They're calling for an EPS loss of 2 cents to a gain of 8 cents. Analysts have been expecting a nickel. The revenue, they're looking for about $1.32 billion. Analysts had modeled $1.35 billion. Call starts at 5 p.m. Eastern. Kelly, back to you.
And the shares down 11%. Josh, thank you. We've talked a lot, Michael, about GoPro. I guess the question comes down to, has it reset enough?
Yeah.
You know, and what are the strategic options?
They've shown some financial discipline. They've obviously kind of tried to manage with the lower expectations here. But, I mean, the fourth quarter guide is really all that matters. It still is a very seasonal business.
I was going to say exactly, the holiday quarter.
It's not 100%. It's not all, but it's really the big decisive one. The stock's been struggling to stay above the lows in the mid-single digits. So, you know, it seems as if there was not high expectations, but again, another one of these crowded shorts, people think it's a one-trick pony.
Kevin, what would you say about, I mean, what would you literally, in terms of what the company should do right now?
It's simply acting like a consumer electronics company, a very niche vertical one in cameras with massive competition coming from the likes of Samsung Galaxy 8 and at what Apple's doing on the 10. But what never developed and what the big dream was and why so many people bought it in stratospheric double-digit numbers was this software ecosphere idea, it becoming a media company and engaging everybody's content and somehow monetizing it. That is long gone as an idea. So now you're simply trading off the ups and downs of holiday season on a gadget. And it's going to be single digit till the cows come home.
All right, let's get FireEye in here. Seema Modi has the results from that company, which just came through. Seema?
Hey, Kelly. Security firm FireEye reporting third quarter earnings. It's a loss of 4 cents, which is actually better than expected on its bottom line. Top line numbers also look better than expected at $189.6 million. Analysts were looking for $186.4 million. Product subscription billings increased 28% sequentially from second quarter of 2017. The stock is down more than 11%. We'll get on the conference call and see what exactly management has to say. Back to you.
Thank you, Seema. Sarah, this has been another surprisingly challenging space.
Well, it's one of those things where if your guide is lower for the next quarter, it doesn't matter what you did for this quarter. And I think for a lot of these companies that people were expecting that growth, if they don't get it as fast enough, they're just going to say, you know what, I'll put my money someplace where it is growing. Yeah. There's been a lot of have and have-nots, and the really big guys are the haves, and a lot of little guys are the have-nots on this, and people just get exhausted and they say, why should I stick with this if there are other places to go?
On that very note, let's see how Yelp did. Those earnings just crossed. Aditi Roy has those numbers. Aditi?
Hi, Kelly. Those shares are sliding right now, with double digits, down 13% because of weak guidance in fourth quarter revenue. Let's start with the top line, though. The company beat on revenue $222 million versus $221 million, which analysts were expecting. On the bottom line, it was a big beat. Analysts were looking for a loss of 2 cents, but the company reports a beat of positive territory, 9 cents. But the Q4 guidance on revenue, that seems to be the problem. The company reported $211 to $216 million versus analyst expectations of $232.5 million. Another few metrics that's important to look at: ad revenue. That's where the company makes the bulk of its money, and analysts are looking at that number. That was a slight beat there. Paid advertising accounts is another important metric. A slight beat there. And transaction revenue, the company has made that a focus, and that also was a slight miss. Was $18.5 million versus $18.8 million. But again, what seems to be driving the shares down right now is that miss on fourth quarter revenue guidance, and we'll hear more color on the call. And also expect to hear more on that deal with Grubhub that they announced last quarter. A lot of analysts expecting that will help improve its profitability. Back to you, Kelly.
Aditi, thank you. Yelp's down 11%. Sarah, this is what you were just saying. And so we are now left with, in a way, what feels like a mature industry. It's kind of what Kevin was saying earlier, too. You have the big four, or 5 or 6 in this case, as it may be across tech, and then you have all of everybody else trying to
it's like
stay
the
competitive.
also-rans, right? It's like everybody wanted to be the biggest search engine, but Google, Facebook has that space. So once you own that space, the guys who are trying to come behind, or even who started it but then lost the plot, can't get back in people's and can't get that mind sharing. and clearly can't get the revenue that they need.
Worth mentioning, though, Yelp stock up 70% off the lows,
Wow.
up 20% year-to-date before today's number. So I think you had people think, yes, they're definitely an also-ran, but there was a place for them. And they do have a franchise.
Them quite useful.
But if you come out with a guide that says you have essentially zero sequential momentum from this
Right.
quarter to next,
Right.
that's something that's going to give you pause once you've had a run like that in the stock.
What is the ultimate outcome of a Yelp? Is it going to be around in 5 years, or is it just Yahoo in a different Halloween costume?
Does it become more valuable because it has
I say
this...
less. I say it becomes an add-on to somebody who's got a multi-billion-dollar market cap that says, I could use that. But how does that become a platform by which you invest today at a crazy PE, and 5 years from now you get a decent return? That's why you get such volatility on these earnings reports. You're trading at crazy multiples now.
But is there usefulness in what Yelp offers,
Yes.
or is it just so easily
But why is it public
commoditized?
to me, it's just a feature. Why is it a public company? I'm not against the management or anything. Why is it public? Why isn't it either making money privately, waiting for somebody to acquire it, and consolidate it into a bigger digital platform? That's why you get punished. Anytime you lose 12% in one trade, that's very painful.
Yeah, and perhaps they're thinking some of these same things right now. Shake Shack earnings are out. Let's get right over to Kate Rogers for those numbers. Kate?
Hey there, Kelly. Well, the stock's not moving too much, but this is a fairly decent report for Shake Shack. Now, for EPS, 2-cent beat, reporting 17 cents adjusted versus the street's estimates for 15 cents on revenues, $94.6 million. That's just about in line with the street's estimates of $94.5 million. Comp store sales actually declined less than expected for this quarter. They were down 1.6%. Those same Shack sales, as they call them. The street was looking for a fall of 2.6% in the quarter. They also said they opened 9 new Shacks. They increased their guidance for company-owned Shacks for the year, saying they're going to open between 24 and 26 new domestic-owned Shacks in 2017, 8 net new licensed Shacks for the year. Next year, also saying is going to be their biggest yet, with between 32 and 35 new domestic company-owned Shacks, 16 to 18 net new licensed Shacks. They also had a tiny raise in guidance for their same Shack sales for next quarter, saying they're going to fall between 1.5% to 2%. That's versus the initial estimates of a decline of between 2 and 3%. Kelly, once again, though, this stock, actually now higher by just about 2% in the after-hour view.
Kate, how many did you say they're opening next year? That was 30-something. That was a big number.
That's right, Kelly. So to reiterate that, they said it's going to be their biggest year yet. They're going to open between 32 and 35 new domestic company-owned Shacks, 16 to 18 net new licensed Shacks.
All right, that's going to be interesting. The shares are up 2% on that, as you mentioned, Kate. Thank you. And we should note Shake Shack CEO Randy Garutti will be on Fast Money Monday at 5 p.m. for his first interview after earnings. Shares are now up more than 3%. Michael, I guess the reason I find that interesting is because there's some concern about cannibalization with Shake Shack every time as it keeps opening. So they are slightly increasing openings this year, in a big way increasing openings for next year, and the shares are higher.
They still have new markets to go into. So, I mean, they're being pretty methodical about it. It's actually one of these stocks that's kind of slowly trying to grow the footprint of the store base into the valuation, because the valuation out of the gate was wild for the scale of the company itself.
All right, I was just we see the Tesla number has just crossed. We're not quite. All right, good. Phil LeBeau is ready. Phil, thank you very much joining us by phone as he starts to pour through these results. Phil LeBeau.
Hi, Kelly. I am here, and I've got the numbers for Tesla in the third quarter. A wider than expected loss. Tesla losing $2.92 a share. The estimate was for a loss of $2.29 a share. Revenue coming in slightly better than expected. Not a big surprise here since we get the delivery numbers from them. Revenue coming in at $2.98 billion. The estimate was for revenue of $2.94 billion. We're just starting to pour through the investor letter, and that's where you find the little nuggets that are most interesting. But when it comes to Model 3, they do say that they plan to be at a production rate of 5,000 Model 3 vehicles per week by the end of the first quarter. And remember, they had already set a target of being at 10,000 per week by the end or at some point in 2018. We're going to go back. We're going to look at the letter. We'll give you more. But again, Tesla, a wider than expected loss of $2.92 a share. Back to you.
You are on the phone. We see you well. The shares are down 3%. Phil, thank you. 5,000 per week, guys, by the end of the first quarter. This is a company famous for kind of saying, okay, yeah, but we're going to do.
We're going to get there, yeah.
Better. We're going to get there. Just again, going back to what they did in the third quarter, they delivered 220 Model 3s. Kevin, what do you think?
You know, if you own these shares, you have to be sighing relief right now because they're losing more money than they thought they were going to lose. Their production is cut in half in estimates, and you've only lost a few bucks off the stock. I mean, this gives you...
They're talking a drop of 6%.
I'm talking about this stock trading at $50 one day. So, you know, this is a wonderful, wonderful.
You have pushed this. First it was down 50%. Now it's all the way down to $50.
But, you know, I think about 5,000 units in the automotive market of the world. It is such a nothing burger. It is such a fractional zero in market share, and yet it's got this amazing support. And I say great. By the way, he is the best entrepreneur I can think of, going to the moon, battery deals, car companies, whatever he wants to do, and I applaud him for that. I applaud him for that. But this, in a standalone business as a car company, if you just landed from Mars and you were looking at opportunities to invest in automotive, you would scratch your Martian head and say, I think I better fly back home. They don't trade on this planet in any intelligent way.
Well, Elon will get you back and forth to Mars. So
Exactly.
It makes no sense.
Sarah, what are you thinking?
You know, first of all, to get to 5,000 and then to 10,000 within the time frame that they're talking about, to me seems like an awfully ambitious move on just the production side. But I also think, again, it is not being traded as if it was a production company. It's being traded as if it had all of these things together, the batteries, the ecosystem, this whole, so it's giving you this idea, and whether or not that comes to fruition in a financial sense is the harder thing to decide, because I think that this is really, from a valuation standpoint, it's a challenge. But that's not, people are looking at this and giving it a hall pass on a lot of things, including how much money they lose.
Michael?
Yeah, that's all true, although I do think, as I said, you've kind of had a little sobering of the outlook and the way the stock is traded, trying to weigh both sides of it. So, look, it's been trading on this kind of total addressable market and how much Tesla can get of that market down the road. And I think at every stage it's been a show me, and you know, we'll see if they can actually get to this 5,000 a week, which again is pretty trivial in the grand scheme.
Just a couple of Modi with those numbers. Seema?
Kelly, it's a penny beat for Kraft Heinz on its bottom line at 83 cents adjusted versus the estimate of 82 cents, but a miss on revenue, which came in at 6.31 billion. Analysts were looking for 6.33 billion. Just want to point out that in the third quarter, United States net sales were $4.4 billion. Now that is down 0.4% versus the year-ago period. Kraft Heinz CEO Bernardo Hees, he says there's no question that the retail environment, particularly in the United States, will remain both dynamic and challenging. However, the investments we've been making in our brands, he goes on to talk about how that's where the growth is. You can see the stock is down, though, more than 2% here. Back to you.
Yeah, some concern the blue may be coming off the 3G cost-cutting rose there. Kraft Heinz down 2.5%. Now, how about Cheesecake Factory? Those results are out. Kate Rogers is back with those numbers. Kate?
Hey, Kelly, that's right. And the stock is falling on this news. It's a miss across the board. The company reporting earnings per share of 56 cents versus estimates of 60 cents. Revenues of $555 million versus estimates of $566 million. Comp store sales also fell more than expected, down 2.3% in the quarter. This is versus estimates of 2%. They're saying this is due to the impact of Hurricanes Harvey and Irma. That took off a 0.8% decline as far as their comp store sales were concerned, although their CEO David Overton did say that excluding the weather impact in the quarter, that their sales and earnings were actually in line. As you can see, the stock is down, though, more than 3% right now. Back over to you.
Kate, thank you. Sarah, Kevin, before we go, what are you guys going to be listening for? We get the conference calls for Facebook, Tesla, and others that start as we head into next hour. What are you going to be listening for?
I think overall you're looking for what's going forward, because, again, people are looking for what's going to happen next year, because you're getting to that end of the year period where people are going to start talking about 18. So I think that that's going to be important, because the market has done really well on earnings this year, and the question is, can that momentum continue? I think that's going to be an important part of the season.
I'm interested in any clues about the regulatory environment, what the management thinks about what the battle will be between regulators trying to turn a Facebook and an Alphabet into a media company and have to play by the same rules.
Oh, yeah.
They're certainly taking away advertising dollars from media companies, so why aren't they media companies will be the big debate for the next couple of quarters. And I think to the extent that that doesn't affect earnings, because I just look at the digitization of advertising away from print and radio and traditional linear TV onto Facebook, that looks really good, unless the government says, hold on, let's change the rules.
All right, guys, thank you very, very much. Busy hour here to kick things off. Sarah Hunt, Kevin O'Leary, and we have more when we come right back, too. Facebook shares are higher after reporting those better-than-expected results. We're going to get some more reaction to that and find out whether the stock can keep rallying. Plus, Tesla shares are dropping after its report. Ahead, we'll find out if problems with the Model 3 production will keep weighing on the stock. We're back in 2.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanolia and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
Class. Speed. Raw power. Max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
As we speak, Qualcomm barely lower there. Shake Shack up 6% now. That's a big increase after it said it's actually going to open more stores this year and next year than originally planned. Kraft Heinz down 2.5%. Yelp's loss has moderated. It's down only about 6% right now. Cheesecake Factory down 3%. Let's get more on Tesla's cash burn here. As we mentioned, the shares are moving lower. Send it back to Phil LeBeau for that. Phil?
Kelly, they ended the third quarter with $3.5 billion, approximately $3.5 billion in gross cash. Now, that was an increase towards the end of Q2, but keep in mind that they also had about $1.8 billion in debt issuance in August. So in terms of the cash position right now, that's going to get a fair amount of attention from the analysts during the call. Tesla goes during its in its investor note that it believes it's well capitalized to handle the new Model 3 production schedule, which, as we mentioned to you, is for 5,000 Model 3s per week by the end of the first quarter. We have yet to see what the production plan is for the fourth quarter. Remember, initially, the plan was that they were going to be making 500 per week by the end of the fourth quarter. That obviously is going to be one of the questions during the conference call, which comes up with Elon Musk in about an hour or so. Kelly, back to you.
All right, Phil, for now, thank you. We've got some news on Under Armour here. Let's get to Courtney Reagan. It's not earnings, is it, Court?
This is not earnings, Kelly. We just got those from Under Armour. This is reportedly 2 more executives leaving the company, according to Dow Jones, which is citing an internal memo circulated among senior executives on Tuesday night. According to Dow Jones, Under Armour is losing its chief marketing officer, Andrew Donkin, and head of women's, Pamela Catlett. Both will leave at the end of this month. And the memo that Dow Jones is citing says that they have decided to mutually depart ways and really doesn't give us much more. But we know that Under Armour has been under pressure, both the share price and the sales, as they face increasing competition, particularly from Adidas. Kelly, we also have some information for you from L Brands. And I want to switch gears because the stock is moving on this. L Brand shares up about 8% in the after hours. The company reporting October comps up 2%. They're also increasing their guidance for the quarter. They now expect to land in the higher end of the previous guidance, 25 to 30 cents, compared to analyst estimates of 29 cents on stronger than expected revenue for the month of October. Back over to you.
Wow, that's a big pop, up 8.5%. Yep. Courtney, thank you. Let's go back and check on Facebook, who just reported earnings a little while ago. Joining us for more reaction, Ben Dunbar, who's a Facebook shareholder from Gerber Kawasaki. James Chuckmuck, here with us at Post 9. He just upgraded the stock to a buy from hold last week. And Ali Mogharabi from Morningstar has a hold on the stock. So welcome to everybody. Chuckmuck, just start with you. The shares are up about 1%, but what are you focused on here?
I mean, look, what you wanted to see was the revenue coming ahead of expectations and a flatter slope on the margin degradation. I think that's what you're seeing right here. I think that maybe that comment from Zuckerberg perhaps spooked some people about maximizing security over profits, which is the right thing to do. But at the same time, when you think about the nominal dollar value of the investments, I'll call it $100 million versus $55 billion revenue next year, it's a drop in the bucket. So. Bye.
And we had some harsh comments on Capitol Hill against Facebook and others today. Dianne Feinstein saying to the companies, you bear this responsibility. She was saying how she had gone home with disappointment after yesterday, saying the companies don't get it. We're talking about a cataclysmic change. We're talking about the beginning of cyber warfare. You have created these platforms. They are being misused, and you have to be the ones to do something about it. Or we will, she said, Ben. How concerned are you about that weighed against the strong numbers this company just reported?
Well, the numbers are great, and although it's maybe a little bit of negative press for technology as a whole, it's all relatively new, and it's something that Facebook is getting out in front of. It's something that they're taking advantage of. They're spending the money to do it, and it's just going to be a drop in a bucket. I couldn't agree more that ultimately it's not going to have a big effect on profits or revenues, and it also reinforces how good of a platform Facebook is. And we're still going to see a lot of small businesses, a lot of movement from television advertising onto Facebook's platform.
Ali, you have a hold on the company. I mean, how big are your concerns about a regulatory clampdown?
Well, not that big, actually. And we actually think that Zuckerberg, in our opinion, is actually pursuing a pretty good strategy, because in the long run, it will have a pretty good return on those types of investments in terms of security, in terms of maintaining data and so forth. So we think overall is pretty positive. The amazing revenue growth that we keep seeing unfortunately is proving us wrong, but that's certainly good for the investors. Top line still growing at 50%. It's just amazing. It's an amazing company.
I think what people sorry, Bill.
Go ahead.
I was going to say what I think people miss is, although there are so many users on Facebook, there's still so many small businesses. There's still so much money that's going into advertising, not on Facebook. And so that's where we're seeing that in revenues is from that movement of ad dollars being spent in other places and better allocated to Facebook. And ultimately, people are seeing results with their businesses. We're seeing it personally in our own business and in our clients' businesses.
Yeah.
James, just in terms of those drivers, right. I just want to get to the factors that will drive that, which would be pricing and the ad load. So obviously those are the two components. Yep. What's the trajectory look like right now, James?
Well, I think what's interesting on the pricing side is that what we're hearing from agencies and advertisers is that ROI thresholds are coming down. Which means
so they're willing to pay more per eyeball
in order to reach. And I think that there's a big dynamic that's happening in the broader advertising market. And we've talked about this before with the CPG, with brands, less brand affinity, more toward private label, and the Amazon effect, call it. What will happen with that is the fact that you can't stop this until the government wants to step in, and there's no indication that they want to step in anytime soon.
All right, we'll see, even after today's testy hearing, if that's the case. And after these numbers,
from a breakup standpoint.
Right. Appreciate it very much, guys. James Chuckmuck, Ben Dunbar, Ali Mogharabi. Shares are still up a little less than 2%. Some breaking news on the Fed chair decision. Sue Herrera, what now?
Dow Jones is reporting, Kelly, that the White House has notified Federal Reserve Governor Jerome Powell that the president does intend to nominate him as the next chairman of the central bank. That's according to a person familiar with the matter, according to Dow Jones. Apparently, the president talked to Mr. Powell on Tuesday, according to Jones, and the president had settled on Mr. Powell by Saturday. However, this source to Dow Jones cautions that the president could change his mind. The president apparently plans to formally announce the decision Thursday before he leaves for his trip
to Asia, which will occur on Friday. So, according to Dow Jones, the White House has notified Mr. Powell that he will be the next head of the U.S. Central Bank. Back to you.
Sue, thank you. Michael, you know, every hour now seems to bring further evidence that this is definitely happening.
I think the market has certainly made its peace with this. It seems like the least kind of disruptive choice in terms of the path of policy. So I do think, you know, the market's going to kind of check off this box and say, we can live with this.
All right, we'll see tomorrow, and we're supposed to get this announcement. Meantime, can Tesla turn things around after its latest earnings report? Shares are still dropping after they released their latest results. They're down a little less than 4% right now. That's next. Plus, Shake Shack shares popping after its earnings. Find out if investors should take a bite out of this stock coming up.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, brought to you by Fine Cure Pharmaceuticals, Nanonia, and Biba.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Winning not just in China, but also in India, throughout Southeast Asia, and this is important as well. Average selling prices for these OEMs are rising. So think Huawei in particular here. They're moving into the premium price tier, able to raise prices. They're not just dealing at the cheap end, and that means they're buying higher-end Snapdragon processors. Malenkov also telling me that there's no new news on the licensing front. Qualcomm's, though, happy with the underlying market dynamic there, and points out this is really just a fight with two OEMs, though one of them is Apple. I mean, they're pretty big. 5G is still a calendar 2019 event, but he said the whole world is going to participate, so they expect revenue there in the beginning of calendar 2019, Kelly.
All right, John, thank you. Qualcomm shares down just fractionally at this hour. We'll keep an eye on those, along with Tesla, which is dropping on the back of its earnings report. We've got a debate on whether this is a buying opportunity when we come back in 2.
They're sharp, They help you get the maximum value for your money.
Market should be too worried.
I can hold on for the next
Growth will be phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock
actually
actually.
valued.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from SP Tulsian, Prakash Divan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
Off with a lot of good news. I don't think it's derailed. I just think it's expensive.
And James, what about looking toward the Model 3 schedule now being pushed out? They're saying, you know, they'll be to this 5,000 unit pace by the end of the first quarter, potentially. And then in terms of the 10,000 per week goal, which they had stated before, they'll say, look, they'll have to reevaluate, really kind of conveying that it's quite a push and there's nothing really in the bag in terms of them being able to do this.
Yeah, and great, and thanks for having me, by the way. What I would say is they need to, you know, they have a credibility problem. They've had a credibility problem before, but they have one now, and they need to, you know, hold to some form of guidance on the Model 3 ramp. 1Q, I think, from our conversations, is about what people expected based on being delayed, you know, to only 222 units through the third quarter. So that, I think they're managing expectations there to hit that. Gross
Jamie,
margins, go ahead, sorry.
I was just going to ask you, but comment on the margins quickly.
Yeah, look, I think gross margins were a little bit more, frankly, they were above consensus slightly. I think many people knew that with the Model 3 being lower than expected, costs are still very, very high, so margins were going to come under some pressure. I don't think that's a surprise here, but clearly the 1Q, they have to hit something very, very close to 5,000 units per week, or this is going to reset lower, we think.
Yeah, Ephraim, I'll put the question to you because it came up earlier. Should this company be valued like a traditional car company?
Well, this definitely is not a traditional car company. It never has been. You know, it's really changed the business. The fact that so many companies plan to have their electric vehicles by 2020 or 2021 or moving towards autonomous vehicles, I directly credit this largely to Elon Musk. So, you know, it's a technology company. It does deserve a premium to General Motors or Ford, but I think, you know, once again, that it has an excessive premium right now for the risk that people are taking.
All right, a little bit of that premium coming off. Shares down 4.5% after hours. Ephraim and James, thank you both. Talking Tesla.
You're welcome.
Meantime, Facebook started this week's tech earnings wave, and we're just minutes away from the social media giant's conference call. We'll look at what to expect on that coming up. And then Shake Shack rallying big, actually, after its earnings report now keeps moving higher. We'll dig into the numbers and look at why next.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy and argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanolia, and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Welcome back. Shares of Shake Shack up 5% after its latest earnings report. John Blank from Zacks joins us now. Talk a little bit about why. John, they increased the pace of restaurant openings. What do you think's going on here?
You know, Kelly, this stock's been trading from in a swing trade from $30 to $40 a share. We entered this earnings report about $38 a share, and we're going to pop up to $40. The earnings beat 2 cents on a 15-cent consensus, which is standard stuff for this stock and this company. Going back to the IPO 2.5 years ago, they beat every quarter, Kelly. So I would not be a buyer on this stock. I think this is a swing trade to 40, and we're seeing that pop to 40 right now.
John, they did have some margin pressure at the store level. They talked about the labor costs being up and things like that. Is the actual single store profitability worthy of the kind of premium that the company trades for right now?
Yeah, well, the premium, Michael, on a forward look, 59 cents a share is what they're looking for in 2018. That's a 63 times earnings. So I'm never a buyer of a stock at 63 times earnings. As far as they're looking at about 14 stores, $4 million in sales a store, about $56 million a year. They do about 20% revenue growth on that, but that's not what you're talking about, which is that margin pressure. I don't know. You have to wonder if these hiking wages this time of the cycle is going to start to hurt companies like this. I think you got to think, longer term, other than this pop to the swing at 40, I'm a seller.
Mike, you were actually looking at those labor costs, including in Cheesecake
Factory. You know, it's very true across restaurants in particular. It's a very acute pain point that they have, and there's really no way out of it, right?
But it's a good sign for the economy. Look, this is the conundrum these companies face right now. It's okay that those labor costs are going up. Do you pass it along, or do you not? Are we in an environment where they can pass it along?
Yeah, not yet. At least not at the same pace. I mean, Cheesecake top line was down slightly, and their labor costs are up over 3%.
John, what would you say about their increasing labor costs? They have these these sort of ordering kiosks now. Shake Shack does it. They're trying to roll out and maybe help keep that number down.
Yeah, the thing you got to worry about, Kelly, is this is a company that's got lines out the door at a lot of their new stores. So they are so critically understaffed to begin with. And you have to say to yourself, if I were them with twice the sales of a McDonald's, I'd probably pay up and lose some margin here because of the growth. So I think since the stock and the company are really about growth, I think you'd probably do an Amazon here, get away with a lower margin, bring those workers in and get those lines down and see if they can get the revenue up and the quality up.
All right, John, thanks for joining us. Yeah, Shake Shack still up 5% after that earnings report. John Blank from Zacks Investment Research. Still ahead, shares of cybersecurity company Symantec. That's another one getting slammed today after hours, down about 8% now. We'll bring you the details of that report right after the break.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze it from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia, and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Class. Speed. Raw power. Max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
As much as 8%. Back to you.
Seem appreciate that. Mike, I was just double checking, but I believe they own LifeLock now, yeah. This came up big time after the Equifax hack when people started to say, I need to sign up there. Interesting to see the shares drop 8%.
It did. I don't know if it's tied to anything else in terms of, PC volumes, things like that, but obviously not a great one, and really hasn't been that wonderful a growth business for a while.
Which is, again, shocking given what we were seeing on the cyber
broader trends,
breach front. What do analysts want to hear in the conference calls for Facebook, Tesla, and Qualcomm? That's next, and we come right back.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18.
What and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next 2 or 3 years.
phenomenal. Buy with a stop loss of
It is positive for the
It's
stock.
a marquee stock actually valued.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from SP Tulsian, Prakash Divan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and play accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, brought to you by Fine Cure Pharmaceuticals, Nanonia and Biba.
This is TV18 and you're watching CNBC-TV18.
You think it has to be somewhat ad hoc, you make kind of your best efforts, measures, and continually, as an ongoing thing, you know, tweak your algorithms.
By the way, GoPro and FireEye, they're still down about 11-12%. Yelp only down 6%. It had a bigger decline. Shake Shack coming back a bit, still up 4%.
Short sellers are getting paid on a net basis today because a lot of those stocks were big crowded shorts.
That's a good point, too. Michael, thank you very much. That does it for Closing Bell. Fast Money starts right now.
Fast Money starts right now, live from the NASDAQ market site overlooking New York City's Times Square. I'm Melissa Lee. Our traders on the desk are Tim Seymour, Karen Feinerman, Steve Grasso, and Guy Adami. Tonight on Fast, nothing can stop this rally. The market's surging to record highs despite a delayed tax reform bill and uncertainty around the future of the Fed. Reports saying that President Trump will pick frontrunner and Fed Governor Jerome Powell. Our own Steve Leisman is working the phones right now. Will join us with the very latest. Plus, 2 huge after-hours movers. Facebook jumping to all-time highs as the stock beats, while Tesla sinks after its earnings report. We're following every moment of these earnings calls. Julia Borson's in L.A. on the Facebook call. That's starting right now. Phil LeBeau in Chicago getting ready to jump on the Tesla call. And Fast Money friend and tech guru Gene Munster is in Minneapolis, tag teaming both of those conference calls on the red phone. We start, though, with Tesla. The stock sinking after reporting a wider than expected loss, entering a bear market after hours as it approaches that key $300 level. Let's get to Phil LeBeau for all the details. And Phil, the details are in that shareholder letter. and there are a lot of details when it comes to the Model 3.
A lot of details in there about the Model 3. We'll talk about that in a little bit. But the free cash flow for the quarter, Melissa, listen to this. Negative $1.4 billion for Tesla. They ended the quarter with $3.5 billion in cash on hand. That's one reason why the stock is under pressure. But as you mentioned, when it comes to Model 3, the company has issued new guidance, if you will, in terms of its production schedule. It now says that it expects to build 5,000 Model 3s per week by the end of the first quarter. What were the production bottlenecks, at least as much as they're going to tell us in this investor letter, had to do with the battery modules being built at the Gigafactory. They could not get those into production as quickly as they would have liked. So what we know is that 5,000 per week by the end of the first quarter, with an update on full year production coming in January when they release their full year delivery numbers. As you take a look at shares of Tesla, keep in mind that this conference call at 5:30 will be chock full of questions for Elon Musk, most of them about the Model 3, but you can bet the company's cash position will also get a lot of questions. Melissa?
I mean, we knew how many Model 3s were produced in the quarter because of the timing of the latest delivery numbers. So I guess the question would be how many were produced to this date. Do you think we're going to get that sort of color on the conference call so we can see how the progression towards that ramp is? Okay.
I would be surprised. I would be surprised, only because I think they will say, look, it's very lumpy. You might have a little bit of a surge over a couple of days, and then you'll have some downtime. That's just my conjecture at this point. So I don't think that they're going to give us that kind of detail, but certainly the questions will be, where are you right now? Where do you expect to be by the end of the year? So that we can then say, okay, this is where you plan to be by the end of the first quarter.
They're also talking in the outlook section of that letter, Phil, that they plan to produce 10% fewer S's and X's in the fourth quarter, shifting that production to the Model 3, which will in turn bring down gross margins for the fourth quarter by about 4 percentage versus the third quarter. Was that expected, or is that a bigger shift than expected?
I'm not sure anybody had it modeled in for that much of a shift, with that much specificity. I think people did expect some of that shift, but I'm not sure people were expecting that much, Melissa.
All right, Phil, we'll check in with you a little bit later on after the conference call gets underway. Phil LeBeau in Chicago for us. Again, that shift, 15% now in the fourth quarter is what they see in terms of gross automotive margin. Q3, just to give you a comparison, is 18.7%. So that's almost a 4 percentage point drop here. What do you
the need for Tesla to get through that sort of that 390 level, which it failed at. Now here we are. This is a replication of what we saw back in June. Stock went from 385 basically down to 310 and bounced. We talked about this a week or so ago. Steve and I were sitting together. Tim was over there. I think there's a real good chance this trends down back to 280. What was basically resistance for 2 years in 2014 and 2015 becomes support. I think there's enough in this quarter to give bears some ammunition to push it on the downside. But if you really parse through this thing, it's a mix now. They're going from the S to the X. I think there's some slippage involved, but in terms of margins will reaccelerate, I think, early next year. So I do think there's enough for everybody. But the big concern is going to be this cash burn is significant. What do they need to do?
So Guy was on point. Tim was negative. BK was negative. Guy was talking about that 280 level in the charts. I didn't think we would break the 200-day, which is 318. So this is extremely bearish for me. But we go back
now.
Long. I'm not long, but we go back to May. These are May levels. So I think you could see some support ahead of Guy's levels. I do think that every time you look at it as a car company, you get disappointed, and then the bulls come out and say it's not just a car company. So I think you have the potential here to bounce the stock around these levels where we are right now.
Yeah. Karen, what do you make of what they said about
Well, I think it's kind of a hope company, you know, and hope hasn't been doing so well. I mean, to me, the idea that production, okay, they have the reasons why it was slower this quarter, but we've heard this production story more than a couple of times. The idea that by the end of January, they'll really have it figured out and be able to give the full year production guidance, that's sort of a stretch to me. So I don't know if, I think when you have a multiple like this and hope starts to crack, I mean, what's the right multiple? I don't know. I know Timmy's been bearish, so they just found it too expensive, wouldn't short it, wouldn't be long it. I don't get it.
Yeah, I mean, look, being shorted has certainly been a really dangerous and painful thing. And for the guys that got short this stock, I'm not sure they were even able to hold at certain levels. We know the short interest is really still very high. But hope stock to me is an understatement. And if you think about the built-in multiple from autonomous, from automation, from the gigafactory, from the grid. I mean, all of these things that are part of why Tesla is not an auto company. Fine, but the reality is 1.3 billion in cash burn. I mean, you can't refute the fact that there's a growing chasm between their deliveries and their cash burn. And in other words, what they're supposed to deliver. Forget the cash for a second. Sorry. Between what's promised, we're going kind of sideways in terms of deliveries, and we're actually moving much wider, I think.
Do you, though, concede, though, at least, that when it comes to ramping up production of a brand new vehicle, that up front is going to be the majority of the cash burn, and that there could actually be it could be step function in terms of once they get those bottlenecks nailed down?
I agree with that, and please come in. But after I say that, I think part of the problem for Tesla is that they're trying to launch 5 new things at once. I mean, I think this company's way too distracted, at least in terms of what their focus. Well, it's helped them with investors. It's helped them raise capital.
Right.
It's helped them have.
I'm trying not to sound like a jerk when I say this. All the reasons that you just stated on the bear side could have been said a year ago, and this stock has ramped up to a high of 386, basically, just a few months ago.
Well,
so
who cares where it was? It's at 307 right now, and so I mean,
no, but when you say that though, but the guys that were short, you said it. You started off 100% correct. Being short this name is a painful process. There's a 20% short interest, and that's why the stock can still rally.
Okay, I mean, again, I don't care that the stock got to 380. That was yesterday, man.
Yeah, but
I mean,
you say that was yesterday, but there were people that were short. There were people that were negative. There were people that were negative from 200 in the stock. So you should care. I'm not saying you're wearing it. I'm saying that the same case, same case that the Bears made could have been made a year ago. And that's my point.
That's true. But at some point, every good story breaks. We saw this time and time again with a lot of good stories out there where people didn't want to believe that the story got broken, and they stuck with it. What if this is the beginning of the break?
Yeah, I don't think it's the beginning of the break. I think you can make a very compelling argument that it is. I don't think it is. I will tell you what's going to be fascinating for me is to see what analysts come out and see what does Adam Jonas say tomorrow about Tesla. What did some of the analysts we've had on the show for a while say about this name? I think there's enough for the bulls to still hold on to some hope, but I'm telling you, there's more for the bears to push. So I think you're going to see price targets get ratcheted down, and I do think there's a very real chance that over the next couple of trading days, we put that 280 print, and then we'll have a conversation.
If you're looking for an entry point into Tesla, do you go in now thinking that around the corner, meaning in a couple of weeks, there's going to be a semi-truck unveil in Fremont, California, which could be the next catalyst for the stock?
Well, don't you want to see how analysts, I can't imagine there won't be a lot of analysts who sort of rethink their numbers, at least give it the 3-day rule.
They're going to be, and analysts are always late on this. They're always reactive, not proactive. So I think that this is the moment you either decide, do I want to step in and buy a quarter position? Do I want to add to my long? I think you have to decide now, because we know those analysts are going to be a little bit late on this.
Well, do you? I mean, I'm not, what would you do
That's
here?
fair. You've been in and out, so in.
I don't, but when you stick me with would I, how long have you been? Are you short the name? Were you short the name when it went up $200 in your face?
Why are we talking about yesterday?
Because you just
makes sense to me. Here's what I'd rather talk about, Steve. I'd rather talk about the fact that people have talked about Tesla for the last 2 years as if there's no competition in the EV auto space. Bottom line is, over the last 6 months, the reason GM is re-rated, the reason Ford is re-rated, the German autos have gone through the roof, and we see what's going on in China. This is not Tesla's exclusive domain. That's part of the reason why the stock actually is coming off.
You don't want to answer in or out Tesla, but I will ask you this question, and it is in the form of would you rather.
Sure.
Would you rather, right now, fresh capital to work, GM or Tesla?
Ooh. Tick, 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 tick.
Tick, tick. This is a TV show with limited time. Tesla. All right.
Okay, Steve's very bullish Tesla, everybody. Just let me know that.
Stock is down 4% more than right now. Bear market territory again. The conference call is underway. We'll bring you all the developments as we have them. Meantime, coming up, shares of Facebook hitting an all-time high after hours, although giving back some of those gains. The conference call is underway as we speak. We'll hear from CEO Mark Zuckerberg later this hour on the quarter, on Russia, on everything, basically. Get instant reaction from Gene Munster. Plus, Papa John says it has a football problem. The company's CEO blaming the NFL, and you will not believe what he had to say about Commissioner Roger Goodell. And later, it's the moment all of Wall Street has been waiting for, the most important decision President Trump will make to date. Who will be the new chair of the Federal Reserve? Reports are flying that it could be Jerome Powell. Our own Steve Leisman working his sources. We'll get you the latest right after this.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these.
Brought to you by magicbricks.com and Renault Capture.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connect, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
Company opened 9 new locations in the quarter, also increased their guidance for the year, saying they're going to open between 24 and 26 new domestic company-owned shacks in 2017, 18 net new licensed shacks. CEO Randy Garutti saying next year will be its biggest yet. The company's increased its guidance to a range of 32 to 35 new domestic company-owned locations for the year, 16 to 18 net new licensed shacks during that time period. Shake Shack also had a tiny raise in their comp store guidance for the year. Now, on the conference call, Garutti said they are actively testing new technology, including their cashless kiosk-only experience store in Astor Place. They're also increasing personalization of the menu, which consumers really like. Despite being pleased with the quarter, they were, of course, impacted by weather, adding that hurricanes led to 9 shacks closing temporarily, with a sales loss estimated at $300,000. The stock, though, of course, reacted nicely. It's up more than 4% in the after-hours trade, also up around 4% year-to-date. Melissa, back over to you.
All right, Kate, thanks. Kate Rogers in the newsroom. We should note that short interest on the stock is pretty high, 44% of shares outstanding short. So what we are seeing could
moving
be a
towards
squeeze.
50%, huge valuation in the stock. And then we talked about $40 has been a level that it's been unable to get through now for the last couple of years. You have to ask yourself, is this quarter good enough to get the shorts to cover? I think it's good. I don't think it's good enough. Margins are hanging in there, which is a good sign. But, you know, when you're talking about a company with a valuation like that, you need growth to accelerate, in my opinion, a lot faster than it currently is. I don't think it breaks through 40 on the upside.
Yeah, I think what's tough for investors right now is the best thing for this company, and a couple analysts have written about this. This is a theme, is to invest in their future. And so in the short run, that's very difficult at a valuation that's very the chart has spent a year basing, and if you look at charts and you look at the price action, this is constructive.
All right, we should note that Shake Shack CEO Randy Garutti will join us live on Monday for his first post-earnings interview. He and Guy will actually have a special surprise for the traders. We hope it's Shake Shack's. You won't want to miss that. That's Monday, 5 p.m.
Well, what would it be, Tim?
I don't know.
If Randy Garuti and I have a surprise, it's not going to, you know, it's going to be a surprise. We're not going to bring you something from, what's that place you used to work at Galleria?
That would be Quick Snacks.
Exactly.
In the Galleria Mall.
If that is still in business.
Probably remember me then.
Anyway, speaking of fast food, check out shares of Papa John's sinking nearly 8% today after its earnings report. The CEO pointing fingers at the NFL for its slipping sales on the conference call this morning.
The NFL has hurt us, and more importantly, by not resolving the current debacle to the player and owner satisfaction, this should have been nipped in the bud a year and a half ago. Like many sponsors, we are in contact with the NFL, and once the issues are resolved between the players and the owners, we are optimistic that the NFL's best years are ahead. But good or bad, leadership starts at the top, and this is an example of poor leadership.
Papa John's is a sponsor of the league, so is the NFL to blame, or does Papa John's have a real pizza problem? Steve.
Well, it looks like they're down 27% year to date, and if you look at Domino's Pizza, they're up 11% year to date. But there's definitely a problem with pizza for the last month versus burgers. You could see Shake Shack, you could see McDonald's, you could see burgers versus this type of meal. I don't know if it's an NFL deal or not. I don't know if it's an NFL problem or not. I would say that if they're blaming on the NFL and it gets better, then you could buy these stocks because this is at support. But I would wait a little bit before we decide this is the time to rush in on pizza.
I would think they have excellent data as to whether this correlates with the NFL. I mean, right? They have the data, what time every order came in, right, during the game. I mean,
you buy it. You buy it. You believe them.
I believe them. Yeah. Absolutely. I mean, it might not be all of it. Maybe it's ceding some share to Domino's, although if they're both going down. I believe it. That was pretty striking, that very clear shout out to Roger Goodell. That's interesting.
Yeah, but I mean, and so are they that reliant on the NFL, and how good does that make you feel? I don't think they are, by the way. Okay, so just to be clear, I mean, the pizza industry in this country, Guy probably owned a pizza place at one point, very fragmented. And there's a lot of room for the big boys, including Domino's, to consolidate. There's a lot of that to go. International is a third of their sales. They have a heavy runway there. So if you're looking for growth from this company that trades, you know, roughly 19 times forward, it's not terribly expensive, especially when you look at the others in the space. Multiples in the entire fast food place have gone higher. I'll say this, labor costs are going to go up for these guys, and and food costs, I'd be careful.
Yeah. I know that you may be biased because of your time.
Because of your time
at
Domino's. I thought you were going to say something else. My heritage. I thought I was going to hear the word heritage.
No.
I'm glad it was my time.
Why would I even know?
I'm Italian American. You know what I mean? I'm Italian.
Working at Domino's.
Yes, I did work at Domino's. So look at that.
Oh, no.
Look. Oh, wait a second.
That's you at Shake Shack. Hey, the surprise is being blown.
Who played that footage? How did they even get that? I haven't even done it yet.
You know what? That's a tease.
We wouldn't have known that, actually.
Anyway.
And then you brought, I spent time at Domino's. I'm sort of, first of all, I don't like the fact that the CEO, went so hard after the NFL. Don't bite the hand that allegedly feeds you. No pun intended. So, you know, when things were great, I didn't hear him trumpeting how great the NFL was, although I'm sure he felt that. Now he's taking the other side. Not a fan. But at 19 times forward earnings, I don't think it's crazy expensive. And the short interest is such that maybe people start to get squeezed if it turns to the upside.
Is he not the hand that feeds the NFL?
Oh, I mean, he's a sponsor. I suppose that they feed. It's like
a circular hand.
Circular hand. Still ahead. Check out shares of Facebook and Tesla. Facebook giving up all its after-hours gains while Tesla is tanking. We're following both those conference calls. Tesla's will begin shortly.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking and We have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on, it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Matt, well, why Powell? The 64-year-old native of Washington, D.C., he's a Republican appointed to the Fed in 2012 by President Obama. So he's seen maybe something as a compromise candidate. He's seen continuing the gradual rate hike policy of Fed Chair Janet Yellen, and yet more in favor of changing some of those post-crisis bank regulations than Yellen. That said, he has backed most of those reforms, certainly more than the president has. Powell, he's a former partner at the private equity firm Carlyle Group, where he amassed a fortune in the tens of millions, we're told. Here's what he said earlier this month about the global economy and the outlook for U.S. rates.
You've got, for the first time in quite a while, synchronized growth around the world. You've got a dollar that is flat to down. You've got commodity prices up, and you have really significant reduction in downward pressure on the Chinese currency. So all of this, I think, is taking place against a backdrop where, as long as this backdrop sustains, it's likely that the process of normalization will proceed without significant disruptions.
Worth pointing out that Powell stands opposed with some Republican Fed critics. He has definitively called the easy monetary policy of the post-crisis era a success. So, Melissa, that maybe sets up for some, fisticuffs or whatever you want to call it at the hearings. Not a lot, maybe, but he's also said that he doesn't think the Fed ought to do a lot of tinkering with the economy.
Right. Steve, thank you. Steve Leisman in Washington, D.C. for us. So what does this mean for the markets? This is the consensus view in terms of Fed picks. Tim?
Steve, very plugged in. Great to get that insight. And look, you said it on the lead-in in the last block. This is the most important decision that Donald Trump has made yet. If that's the case, there should be some fear. Look, no matter what, changing continuity at the Fed, to me, is something that the market should not be blasé about. I agree. This gentleman has proven to be as dovish as at least the status quo. I think that's ultimately very good. I want the Fed to be independent. I don't want this guy to be a puppet of Donald Trump. But to say that the Fed, I think people are overall too complacent on the impact of the Fed. We had an ADP number this morning which showed that there was an enormous amount of pressure in terms of labor, and I think the job market is something that they have missed. And I think PCE is not a good gauge of inflation.
I am always surprised at how complacent everybody is about the Fed, considering what the Fed has done has set us up for markets at record highs, and the Fed is embarking on getting off of that easy money path. What could go wrong, right?
Inflation.
Well, a lot could go wrong.
Inflation could go wrong.
Especially if we have tax in the mix.
Right, and then I guess we could have an infrastructure somewhere in there too, but that's way down the road, if at all. I don't know. I think that inflation is really the most important thing here, more important than the Fed chair, more important than, I think the policy will probably be similar. I think they've done a great job of laying out what they're doing, why they're doing it, and when. But to me, if inflation starts to tick up, which I think will happen, that's the risk.
All right, for more on which candidate would be best for the markets, let's bring in Terry Simpson, BlackRock's multi-asset investment strategist. Terry, good to see you.
Good to see you guys again.
Tomorrow, Jay Powell is announced. What do we do?
I think the markets will actually like that. So Powell basically represents continuity from the current Board of Governors. He's obviously some of the status quo. If we were to get a John Taylor nomination, surprise markets a little bit, and that would be somewhat of a worry for the markets. Now, obviously, John Taylor's not going to run monetary policy off of his famous rule. But the reality is, if you look at his rule, at least right now, that's indicating, depending on what variables you put into the formula, it should be about 150 to 200 basis points higher than what the Fed funds rate is. So the markets would take Powell because that would represent the gradual, predictable manner the Fed has done such a good job over the last couple of years of telling the markets.
Let's say he chooses Powell. Let's say we have some sort of tax cuts, not even putting infrastructure in the mix. Is the risk to the markets to the downside or to the upside?
The risk to the markets is the upside if we basically get tax cuts. But the reality is you still have to, again, the Fed, I think Karen said this or maybe Grosso said this, the Fed is independent. And so if we get an overheating economy, we're already growing above potential in the United States. So we're growing about 2.1%. But long-run potential GDP is probably 1 3/4. So if we get that tax cut, that kind of extra stimulus right now, we're probably going to get that inflationary dynamics. The Fed comes in, basically raises interest rates a little bit quicker. We should see somewhat of a knock-on effect for the equity markets. That would be the challenge there.
Terry, when does this flattening yield curve, which very quietly or maybe not so quietly is at levels we haven't seen, I think, in a decade or so.
75 pips today.
In terms of 2 to 10 year, when does that matter, if at all?
Yeah, it's interesting. So if you look at interest rates right now, both 2 and 10 years have been shifting up over the last month or so. Equity markets still continue to look past it. So there is a fundamental story here that markets are accepting that. When we look at the flattening yield curve, obviously we think we're going to have a steeper yield curve, but to have the back end move up, you have to have inflation move up, right? Because one of the elements for interest rates is having a premium for inflation risk. If you don't have inflation out there, bond investors, nominal bond investors say, we don't need that premium so we can bid down the price.
So where do you want to be right now with the markets where they are in your outlook?
Yeah, so obviously, multi-asset, and obviously, my team works on multi-asset strategies. So you still want to be investing in equities relative to the bonds. The reality is that we still think economic cycle is strong. It can persist for a couple more quarters. So we like equities. We like being exposed to cyclically oriented sectors. We like financials. We like value. We even like technology, given their strong run it's had. So that's where we think we want to be invested, particularly within equities, but equities relative to the bonds.
I think I asked you this last time we were here. In terms of worldwide asset allocation, where do you put the rest of the world versus the U.S.?
Yeah, so a lot of money still flowing in the international markets, Europe, emerging markets, and Japan. The big worry for emerging markets, obviously Tim can talk about this as well, the big worry for emerging markets is if the Fed goes a little bit more, the rate, dollar moves higher. But we've seen kind of a mini correction right now in the U.S. dollar. I will say you got a preface here. Spoiler, we're going to write about the dollar this week in our commentary. But if the dollar moves significantly higher, that could be a headwind for emerging markets. But we still think the dollar is going to be move relatively muted. And so emerging markets can kind of withstand this move here.
Terry, thanks. Good to see you.
Good to see you guys.
Simpson, BlackRock. Steve.
So the market has already digested rates moving up in December. Everyone thinks they're moving up in December. I wonder if someone new is coming in. I wonder if we don't see what that does to the marketplace if we don't see rates move higher in December. I think everyone has factored in this trade, so much so that there's
why wouldn't they move
at this point, though? Why wouldn't we see it?
There's a case to be made that they could sit on their hands.
Why?
Well, what would that case be?
Because you talk about inflation. I get it. There's inflation. If you know where to look, there's inflation. But I don't think there's an overwhelmingly amount of inflation that it would leave the Fed susceptible to just skip out on one.
Well, this one's sort of for free, though, right? Everyone knows it's going to happen. Why not have
the markets have digested it? Why not go ahead and do it?
Because
and then be able to have something later if things turn around.
We've seen the implied indication of whether rates are going higher. We've seen it up 85 to 85%. We see it dive down to 70%.
Steve, I think it would the Fed is behind the curve on inflation?
No, I don't think they are.
I mean, okay, because that's what you're saying. So that's consistent.
I think right now they don't need. I don't think they are. I think they have the ability to sit on their hands one more cycle through, and I think that would.
But they're trying to normalize. They're not trying to be in a rate hike cycle. They're trying to normalize. Yeah, so you don't, you're not in a position to say, hey, it's okay right now. I mean, they have to move. I think the great thing that we've all said here, this Fed has been as transparent as they possibly can be. At one point, we thought this was blasphemous from the Fed, and people never believed them. So for the first 2 or 3 years of Bernanke, that was one of the reasons why we had this volatility. They will say what they will do what they say. I do think that the global economy benefits from this.
I think if they did nothing in December, I think that could be a potentially, a sell-off for the market. Because my question, I would sit here and say, what do they know that I don't know? Right. And what are they seeing that we're not seeing? I think that could be a potential negative. I do think they move, though.
All right. Coming up, Facebook taking a leg lower moments ago. The stock giving up all of its after-hours gains. Now down around 1%. We'll tell you what was just said on the conference call that's got investors hitting that sell button. Plus, check out the recent move in energy stocks surging in the last week. Our traders say there's one name you can still buy. Much more Fast Money right after this.
They're sharp. They help you get the maximum value for your money.
I can hold on for the next growth will be phenomenal.
Buy with a stop loss of
it is positive for the stock. It's a marquee stock.
Actually,
I would possibly wait for the next. Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from SP Tulsian, Prakash Divan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Especially BP earlier this week, they're also trading up in the days since their earnings release. So oil companies are benefiting from two trends. First, obviously, higher commodity prices. That's the big story. But second, more discipline on capital spending. That's an important part of this. As a result, the trading volume in these energy ETFs, like the XOP, the Exploration and Production ETF, and the OIH, that's the Oil Services ETF, OIH, they've been higher, much higher volumes in the last week or so. But this oil rally hasn't really translated into an oil stock rally, at least not yet. Many tried to buy into the oil rally earlier this year, but when oil fell apart in the middle of the year, and it fell apart twice, investors just gave up and the big oil ETFs just fell apart, and they never really far outperforming the E&P and the oil service names. Refiners have notably outperformed, partly because gasoline prices started rising in the middle of the year against the price of oil and rose notably after the hurricanes shut down some refineries. You can see Phillips 66, it went parabolic on the hurricanes. It was up more than 10% in September. So what happens next? It all depends on oil. There's talk we could be staying here in the mid-50s and maybe even move towards the 60s. That would make the Saudis happy. If we start moving towards 60, the big question, will the U.S. fracking industry ramp up production, or will they show some discipline? We should have these problems. Melissa, back to you.
Bob, thanks. Bob Pisani at the New York Stock Exchange. It does seem like that is the cycle that they always go in, right?
That last part is the most. Do we see a lot more supply in the...
Guys are actually starting to see some capex.
You've got the other support potentially of the Aramco IPO.
Right, and I do think that this is that game going forward, and I think that's the ramp and that's the tailwind. But these are huge levels in WTI and in Brent that we haven't seen in quite some time. So we have to get over those on a technical basis, but I do think it's too tempting for OPEC to cheat around 60 in Brent and around 60 in WTI. Forget about it. U.S. supply comes on.
We've been talking about the refiners. I mean, you look at Valero. I think it's a 10-year high or something in Valero. Last time we traded this was, I think, 06 or so. But these levels we're trading at now, very important that we hold these levels in VLO. They just reported a few days ago. And we have been consistent in ExxonMobil since August. Karen and I were talking about this last night. $76 held, bounced, bounced, bounced. Here we are at 84. Listen, I think Exxon is still in a pretty significant downtrend, but we have said that there's a good chance it prints 88 and remains in that downtrend. And that's where I think it's going.
Still ahead, two big after-hours movers, Facebook and Tesla. Facebook giving up all its after-hours gains while Tesla flirts with bear market territory. The conference calls are underway. We'll hear from CEOs Mark Zuckerberg and Elon Musk in just a few minutes. And it wouldn't be earnings without our friend Gene Munster. He has dialed into both those calls. Will give us his key takeaways from the quarter. Much more Fast Money on this very busy night. Straight ahead.
In our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good...
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia, and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
Mine our values. What they did is wrong, and we are not going to stand for it.
Zuckerberg saying that the company is going to prioritize protecting its community
over profits. To that end, CFO David Wayner saying that 2018 will be a significant investment year, guiding that next year's total expenses will grow 45 to 60%. That acceleration in expenses is thanks to sizable security investments in people and technology. The company is also investing in video content to support its watch tab, also making long-term investments in initiatives such as artificial intelligence. Zuckerberg stressing the importance of making the investment in security in particular.
I am dead serious about this. And the reason I'm talking about this on our earnings call is that I've directed our teams to invest so much in security on top of the other investments we're making that it will significantly impact our profitability going forward.
Zuckerberg, as well as CEO Sheryl Sandberg, stressing their focus on community of users, using that term throughout, also talking about their community of advertisers. Sandberg noting that they have now reached 6 million advertisers on Facebook. Melissa, back over to you. So, Julia, that's an increase in 18, 45 to 60% on top of a year which saw an increase in 40 to 45% year on year. Is that correct? Yes. So it's interesting. If you look at the operating expenses for this past quarter, they came in just a hair lighter than expectations. But there's been a lot of talk from Facebook about how they're going to continue to invest to drive growth. Now their operating expenses are, projected to grow significantly more than what the company previously said. Some of that is about the content investment they're making, which, by the way, I want to note that Zuckerberg stress is not supposed to be about passive content, but they want to invest in the kind of content that people will talk about. Interesting that he noted that people tend to talk about sports video, so perhaps hinting that they might make some video investments there. But also, it's really about this investment in security. People and technology, they're going to prevent this kind of situation from happening again.
Is it your understanding that the spending will also include, when it comes to protecting our community, include tools, people to protect political ads or to make sure that they're from the proper sources or disclose where they're from?
It's going to be about transparency and also about just sort of oversight. So this is going to be about everything, both political ads and issue ads. Issue ads are often the harder ones to monitor, but this is going to be about people and the algorithms. So both the humans that you need to hire and the technology to help them as well.
Julia, thanks. Julia Borson, who's on the conference call. Let's bring in Loop Ventures founder Gene Munster, Fast Money friend, for his take on Facebook's quarter. As you see there, he has been on the conference call as well on that red phone. So, Gene, we were sort of joking in the green room before the show started that Facebook puts up good numbers and then they're going to get on the conference call or they're going to talk about spending more next year and the stock is going to go down, and that's what has happened. But what's your interpretation of what they're saying and what they're outlining for 18 right now?
Like you said, it's kind of their textbook, but I want to put some context around why this is a little bit different. If you take the low end of their expense guidance, they said, as you just had mentioned, 45 to 60% expense growth. The low end of that would imply about $4 billion in incremental investment. Now, that basically the street was looking for close to $20 billion for next year. So 20 to 24 billion, $4 billion. This is a huge number that they're going to be spending on. Now, not all of that, as you're just talking about, is not going to be around privacy and transparency and kind of mitigating some of this divisiveness. It's going to be some of it's going to be around content, but still, I mean, just outrageous amounts of money that they're spending, and you can just tell that this whole issue has really got under the skin of Mark. He's going to do anything he can to stomp it out. So I just want to put some context. It is different. That explains the pullback on the stock, but ultimately, this is a good thing for the platform.
Gene, it's Karen. Let me just ask something. Even with expensive going up, you can cure a lot of margin problems with big revenue on a company like this. What's your take on not just this quarter, but looking forward for revenue for them?
So this is the part that I kind of roll my eyes at, is their CFO went through three things and talked about that expense spending, but also said to expect revenue growth to decelerate in the quarters to come. Now, that's almost a cut and paste from his prepared remarks every quarter. And so they say that every quarter, and the revenue growth continues to be strong. And importantly is they've got some big pools that they can monetize, which they're not monetizing now, most notably Messenger and WhatsApp. And really, Instagram still is probably halfway through. And so I think that the revenue growth for this story is going to remain a bright spot for the next couple of years. but the expense side is going to be a little bit of a jab to earnings for the next few quarters.
All right, Gene, thanks for your analysis. We'll see you a little bit later on for your take on Tesla. Meantime, let's trade Facebook. Here on the desk, shares are down by more than 1%. Gene had mentioned Messenger. The last quarter conference call, they did say that Messenger would be sort of a medium-term monetization. So these are sort of layers of monetization levers, as you like to put it, down the road.
And they're going to be huge levers down the road. I mean, I think, you know, Gene, I don't think Gene danced around anything. I'll sort of won't dance around this. I think a lot of what Facebook said they had to say in terms of security spending, they had to say they're going to ramp it up because they have to say they're going to ramp it up. We'll see if they actually do. I think the quarter was outstanding. Operating margins were close to 50%. The street was at 44%, but I understand why the stock is selling off. I mean, when they say that 2018 is going to be a significant spend year, that scares people.
This sounded, I totally agree, this sounded like a Capitol Hill testimony versus an earnings call. The stock is up 58% year to date. I think you have to be in this name, regardless of what he's saying. He's saying it to placate whatever voices are butting up against his or trying to push the latest headline news on top of him. He has to do this, but I think ultimately Facebook is still a buy.
Yeah, I mean, look, 29 times next year doesn't make this stock expensive for the growth you're getting. And the ad rev growth is unbelievable, even though it's going to scale down a little bit into the third and the fourth quarters. I do think the comps are really challenging for these guys, but I do think they have the ability. This OpEx intensity is an issue that, as Gene said, they do this all the time. Yeah. The street was expecting this even before this knew it had to be said. So I don't think the stock's reacting in a big way, frankly. I think it normally would have reacted a lot more.
I mean, this was a gigantic quarter. I agree with everything you're saying. They have to say this, and they have to increase the spend. I believe that. The only problem with this quarter is that it came out a week after Alphabet and last week.
It rallied.
Right. Yeah. And so it rallied in front of it, and now here it is. So it was an outstanding quarter. Yeah. I'm hanging on.
Paring its losses, by the way, down less than 8% right now. Still ahead, Tesla dipping into bear market territory in the after-hour session. The conference call is underway, and we hear CEO Elon Musk is getting a little bit feisty.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several
day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanolia, and Biba.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next 2 or 3
will be phenomenal. Buy with a stop loss of 2.
It is positive for the stock.
It's a marquee stock actually. Valued
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from SP Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18.
112% year to date. I'm still long it. This is a stock that's beaten on revenue for the last 2 years. They're making a heavy push in cloud and artificial intelligence. They're investing. It's still at a great multiple. The average price target on the street is $210. I'm still long it. I think the pathway of least resistance is still higher.
Up next, Tesla thinking after hours, the conference call underway. CEO Elon Musk is getting a little heated. We'll bring you the comments right after this break.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, brought to you by Fine Cure Pharmaceuticals, Nanolia, and Biba.
Just this overview, I'll do a deep dive into the biggest problem area.
And that biggest problem area, the production of the battery modules. They are now pushing out Model 3 production to 5,000 per week by the end of Q1. They'll give us an update on whether or not they hit 10,000 per week by the end of 2018. At the beginning of next year, that's when they'll give us an update. And with regard to that pushing out of the production of 5,000 per week to the end of Q1, here's Musk talking about, in the grand scheme of things, he doesn't think it's that big of a deal.
This I mean, I think in the grand scheme of things, this is a relatively small shift. Because the Model 3 is a 10-year program, and so we're talking about out of a 10-year program. It's in the grand scheme of things, certainly if one is doing net present value calculation, this is immaterial.
We're going to hop back on the call, Melissa. One last thing. You mentioned that he's getting fairly heated.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
Class. Speed. Raw power. Max. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. Profit from the emerging trends in the derivatives market and hedge yourself against volatile markets as we give you an update on the derivatives space. Murugappa Group presents Futures Now. Throughout the day, only on CNBC-TV18.
Presented by Murugappa. Together, let's progress.
They're sharp. They help you get the maximum value for your money.
Market should be too worried.
I can hold on for the next
Growth will be phenomenal.
Buy with a stop loss of
It is positive for the
It's
stock.
a marquee stock actually.
valued
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from SP Tulsian, Prakash Divan and Ambrish Baliga. Every day on CNBC-TV18. CNBC-TV18 Market Wallas. This is TV18 and you're watching CNBC-TV18.
Good morning, everyone. I'm Akiko Fujita, and you are watching The Rundown. These are your top stories today. Wall Street ends higher as the Federal Reserve says economic growth is solid, but the focus is on tomorrow with a tax plan expected, and the Wall Street Journal saying the White House has informed Jay Powell he's the new Federal Reserve chief. In after hours, Facebook's earnings, even the whisper number showing that no impact from controversy over Russian interference. The lawmakers warn winter is coming for social media giants. And Tesla in reverse. Losses for last quarter come in worse than expected, and production issues for the Model 3 still a problem.
Live from the Singapore Exchange, you're watching The Rundown.
Let's get you through the major after-hours action, starting with Facebook. A big beat on EPS coming in at $1.59 a share. Monthly active users up 16% from a year ago, also beating. The stock was up initially after hours, but it's now turning negative. You see it down about 1.7% there. But Tesla, a big disappointment. Losses were wider than estimates. Its biggest quarterly loss ever. And the electric car maker saying it's made progress in fixing Model 3 production problems, but there's still no sign of when all the issues will be resolved. And Qualcomm beating estimates thanks to its Snapdragon mobile chips, but profit was down nearly 90% amid an ongoing patent fight with Apple. Stocks ended higher after the Fed said economic growth was solid. The latest ADP number also adding to that sentiment, although manufacturing data was a little soft. Hampton Pearson is live for us from Washington, D.C. with the latest economic snapshot. Hampton.
Hello, Akiko. Yeah, investors keeping their eyes on headlines from both the Fed and the economy. Janet Yellen and her fellow monetary policymakers kept key short-term interest rates unchanged and issued a statement that characterized economic growth as solid, downplaying the impact of the two hurricanes. Most Fed watchers feel it's a green light for a rate hike in December. Backing up the Fed's prediction of solid economic growth, several key data points. Ahead of Friday's government jobs report, a closely watched survey of private sector employment increased by 235,000 jobs in October. Payroll processor ADP says the gain was the largest in 7 months, and construction firms led the way. And it appears the hurricane recovery was a key factor in an October surprise increase in auto sales. There was also strong demand from rental car companies and strong truck and SUV sales, offsetting lower car sales. Mixed signals, however, from manufacturing. Overall, the sector is still healthy, but factories grew more slowly last month. That's the headline from the latest survey from the Institute for Supply Management. The closely watched Purchasing Managers Index dipped to 58.7 in October from a 13-year high of 60.8 in September. Anything above 50 means expansion. And finally, the wait is almost over. On Thursday afternoon, President Donald Trump is set to announce his choice as the next chairman of the Federal Reserve. After markets close, the Wall Street Journal reporting the president has in fact notified Fed Governor Jerome Powell, who by the way was appointed by President Barack Obama, he will be the president's choice. That news breaking a little over an hour ago. CNBC has not independently confirmed that report, but we'll know soon enough later on Thursday. Akiko, back over to you.
Hampton, that Fed pick certainly overshadowing the Fed decision today. Thanks so much for that. So we'll check in with you a little later. Meanwhile, oil prices pulling back on the latest EIA data. Dan is joining us with the very latest. What, does it look like, it's kind of running out of legs now?
Not just yet, Akiko. We still see prices being quite well supported by talk of an OPEC extension to the overall supply cut deal, but we have prices moderating right now, pulling back from those 2-year highs that we reached in the session yesterday. Traders really have been looking for a reason to take profits in the oil patch, and the lower than expected pullback in crude inventories from the DOE wasn't enough. So we saw crude stocks falling back by 2.4 million barrels last week. It was actually beyond the Reuters expectations of a 1.8 million barrel draw, but it failed to confirm the 5.1 million barrel decline reported by the API yesterday. As you can see on your screen, gasoline also fell beyond expectations and distillate saw a modest draw. As I mentioned, prices still higher than their usual levels at this time of year. We are being buoyed by expectations that we'll see an extension of the OPEC and non-OPEC supply cut beyond March of 2018 at that upcoming OPEC meeting in Vienna. Prices as they stand, Brent still above their 60 handle at 60.44, down about 0.82%, and NYMEX at 54.26 US a barrel, Akiko.
All right, thanks for that, Dan. Come on over here. We've got Todd Horowitz, who's chief strategist from BubbaTrading.com. He joins us this morning. And Todd, today we're going to get to that report from the Wall Street Journal that Jay Powell may be the next Fed chair. But let's start with the Fed decision today. Certainly no change this time around, but it appears as though the Fed's signaling that this upcoming rate hike, which most people anticipate in December, isn't going to be a one and done.
Good morning, Akiko. No, I don't think so, but I think what really happened is they had planned for 3 next year. It looks like they're going to drop to 2. So, again, there's more of this free money, borrow your way out of debt kind of strategy that they're continuing to use, and I think that's why Powell is going to be the next Fed chair because he fits in the same mold as Bernanke and Yellen.
So given that report coming from the Journal that Jay Powell is likely to be named the next Fed chair on Thursday over in the U.S., does that change your view on the Fed cycle at all?
No, I think it, in fact, I think it actually makes me a little bit more concerned that they may even remain dovish for longer. I don't think this is the right choice for the economy. I think that we need somebody who's going to be a little bit more hawkish, that wants to raise rates a little bit more aggressively. I mean, if we are going to get small business growing, it can only come from borrowing money, and without banks lending because of the lack of liquidity and the too tight of a spread, we're not going to see that. And I think you saw part of that today in the Russell. You know, the Russell had a collapse from making new highs, reversed totally, and was down pretty big on the day. So that's a big concern for small business.
Yeah, Todd, interesting to see the dollar also pulling back on talk that Powell will be taking the top job. Who do you think should lead the Fed then if he's not the right pick?
Well, I would have thought Taylor would have been the right pick. He's more of a hawk. I don't know that I like the choices that were given to me. I'd like to see Stanley Fisher, Richard Fisher from Dallas. Of course, he's retired, but I think that we need somebody who's a little bit more hawkish now. If we're truly getting the data that they say we're getting, and if we're truly getting growth and good jobs, then there's no reason why we should be able to raise rates here and actually let the economy stimulate. Because it appears to me there's even some problems with the new tax plan. So it doesn't seem to be so pretty as we look at it, even though they keep telling me how great everything is.
When you have a look at the data in the US, the Fed also weighing in on the situation when it comes to the labour market, saying it continues to tighten. The outlook on inflation mostly staying the same, though. It really does beg the question, what are we expecting out of the NFP report on Friday, and especially after the impact of the hurricanes? Would you expect to see an additional strengthening in those numbers?
They're looking for a really big number, and I could see a big number. The real problem I have with the number, though, is not how many we get, it's how many quality jobs we get. How many are in manufacturing, how many are making more than the minimum wage, and how many are not service jobs. You know, we have a 4.2 unemployment rate right now, but the problem is that the people aren't making more money. They're making less money than they were 20 years ago. So the overall picture does not look good, which is why we see so many problems in retail and everywhere else around, because the average American is not making enough money to pay health care and do everything else that they need to do. And that is the bigger problem. So the number is really not important. It's really the quality of jobs that we're going to get. And that means we need these companies with these great earnings to quit putting the money in their pocket and start doing some CapEx spending.
And Todd, given the questions over the data that you just pointed to, and also, questions over the future of the Fed, I mean, where do you think that investors should be putting their money right now?
Well, I think that listen, there's no place like the stock market overall. I mean, I believe there's going to be a sell-off, but in general, if you're putting in money that you can afford and you're not going to need it tomorrow, then you always invest in the market because it does compound 8% year over year, just not every year. But I mean, if you're looking for something quicker, I'd be looking into some of the commodity spaces right now. I'd be looking into like the grain space. If I was that, I think grains are down at levels that, we're not going to see much lower from here. I think you've got a great chance to return. I think that, you want to stay away from oil right now. I know that you guys are fairly bullish on oil, but I think oil has reached a pinnacle. And here, I don't think it has much more room to go on the upside. I think, in fact, it has a lot of room to go on the downside, especially if we get more fuel efficiency. And the United States, we have a 200-year supply of oil without affecting the greenies. So I think you want to look for value in certain areas. And certainly right now, I'm playing in the grain space right now because I think that's a great value, and I think it gives us a good chance for a big return.
All right, certainly some word of caution there. Todd, always good to get you on. Todd Horowitz joining us from BubbaTrading.com. In Australia, the National Australia Bank is out with earnings, and Matt Taylor is joining us with that. And Matt, we're seeing a full year profit up 2.5%.
Yeah, so we're seeing a modest rise when it comes to that full year profit over at the National Australia Bank, 6.64 billion from 6.48 billion this time ago. Interest income increased modestly over the year as well, up to 13.17 billion from 12.93 billion this time a year ago. Final dividend from the National Australia Bank coming through at 99 cents a share. NAB says the net interest margin, though, it was under pressure, decreasing by 3 basis points. But it was up by 1 basis point if you exclude markets and also Treasury. In terms of some of the commentary, the bank says that credit growth is expected to remain solid, but we did see bad and doubtful debt charges up by 1.3% over the year period to 810 million. Now, it's going to be interesting to see which way the stock trades because we're only seeing modest profit growth, but there are some big changes coming through. The bank says it's looking to target cost savings of more than $1 billion by the end of 2020 as the group works to simplify its business. But at the same time, by 2020, it's going to invest about $1.5 billion in a change in strategy or transition over at the bank. But it also sees a net reduction in staff numbers of around 4,000 jobs by the end of 2020. At the same time, it says 6,000 positions in all will be affected by these changes, but it hopes to bring on an additional 2,000 staff. So there's going to be net staff reductions of 4,000. So we'll wait and see how the market responds to that when NAB shares come online in around about 50 minutes from now. And we'll also get more detail on these results. We do have a first on CNBC interview coming up with the CEO of the National Australia Bank, Andrew Thorburn. That's coming up on Street Signs for you at 11 a.m. Singapore, Hong Kong time. Kiko, back to you.
All right, thanks, Matt. Looking forward to that. In other news, British Defence Minister Michael Fallon has resigned.
In recent days, allegations have been made about MPs' conduct, including my own. Many of these allegations have been false, but I realise that in the past I may have fallen below the high standards that we require of the armed forces that I have the honour to represent. I have reflected now on my position in government, and I am therefore resigning as Defence Secretary.
Michael Fallon there referring to those growing complaints over sexual harassment by not just Fallon, but other lawmakers as well. And it could further weaken Prime Minister Theresa May's position after her Conservative Party lost its parliamentary majority in the June election. Ahead on the show, Facebook shares flirting with break-even in after hours. Earnings were a blowout, but the social media giant continues to face the heat on the Hill over Russian interference. So how much impact will stricter regulation have? We find out on the other end of the break.
This isn't about relitigating the 2016 U.S. presidential election. This isn't about who won or who lost. This is about national security.
Most of the real-life followers have no idea that they were caught up in these webs.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
Class. Speed. Raw power. Max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
Profit from the emerging trends in the derivatives market and hedge yourself against volatile markets as we give you an update on the derivatives space. Murugappa Group presents Futures Now. Throughout the day, only on CNBC-TV18.
Presented by Murugappa. Together, let's progress.
They're sharp. They help you get the maximum value for your money.
target should be to worry.
I can hold on for the next 2 or
Growth
3
will be
years.
phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock.
Actually valued.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from SP Tulsian, Prakash Divan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallahs.
Welcome back to the rundown. We saw U.S. Treasury yields fall in the session overnight on Wall Street. The 10-year yield right now at 2.37, the 2-year yield at 1.61, and on the longer end, we're seeing the 30-year yield at 2.85. Time now for the full bond market report with CNBC's Rick Santelli.
Good morning, Asia. Good morning, Australia. Interesting day. 235,000 for ADP jobs. That doesn't include government hiring, but a minus 25,000 revision the last month. If you look, the bond market made its high yield just a whisker under 240 for 10-year, right as that was being released, and proceeded to move lower to the next number, which was 10 o'clock Eastern. ISM, strong number, but sequentially lower than last month. And when you consider how strong some of the other numbers we've been getting are, whether it's Consumer Conference from the Conference Board or University of Michigan, it really is something to consider. Also, construction spending, good number, but a really big negative revision to last month. Fed meeting, no surprises, a couple of words jostled here and there. But if you look, 2 years virtually hardly moved throughout the entire process. The short maturities most closely correlate with Fed policy, of course, but then again, the rest of the curve's held hostage to policy to some extent. The short end held, the long end gave up ground, and it gave up ground on the numbers I pointed to, but came back. By the end of the session, basically you had an unchanged, a 1 basis point higher 2-year, and everything else on the curve was down by 1 basis point. So hardly any big moves at all. Tomorrow we have some interesting moves. We have continuing claims, the normal Thursday cast of characters, along with continuing, initial and continuing. But we have our third quarter preliminary productivity and unit labor cost numbers. Listen, we all know Friday's jobs report's going to be key. But the reason jobs are key is because historically they correlate well to better productivity. Productivity and growth go arm in arm, and that is one of the missing ingredients that we've had with regard to our economy. The dollar index also may have had a small range, but it seemed to strengthen after the Fed statement and move right back towards the high levels of the day. Technicians are looking at pretty solid support and resistance. 94, which it took months and months to break through, and now we're toying with 95. Reporting for the CME Group trading floor, Rick Santelli here with CNBC Business News, Chicago.
The other big focus in the U.S. tomorrow, a widely anticipated tax reform plan from Republicans. The administration is touting a planned cut in the corporate tax rate to 20%, but there is still a big question of how they plan to pay for that. Former Treasury Secretary Jack Lew spoke to our colleagues over at Squawk Box in the U.S. and said that while he supports tax reform, he doesn't believe the Republican plan is the way to do it.
I've been a big supporter of doing business tax reform in particular, but we were proposing to do it in a very different way. We were proposing to do it in a way that it paid for itself, where it was revenue neutral, where you closed business loopholes to pay for rate reductions. We were working in a bipartisan way with Republicans like now Speaker Paul Ryan and Chairman of the Committee of Ways and Means at the time. This is a very different approach. This is an approach which is cutting corporate rates so deeply that in order to pay for those rate cuts, it's going to have to raise taxes on individuals, including middle-class workers. And the idea of paying for a tax cut for corporations by raising taxes on middle-class people, I think is a bad idea. It's bad for the economy, and it's not fair.
People are sitting at home, or they've, on one side, we're hearing it's just a very significant tax cut for the middle class, and then some actually a really significant increase for the middle class. What do people at home supposed to think? Why should they believe anybody when you hear such diametrically opposed statements?
There are some things that are just facts.
Well, how does it raise taxes on the middle class?
When you cut the corporate tax rate to 20%, right, you can pay for it one way or another.
But how does it raise taxes on the middle class?
By closing tax loopholes on individuals. What You take away the state and local deduction, it's going to raise taxes on middle-class people. You take away 401k contributions, it's going to raise taxes on middle-class people. We don't know that any of that's going to happen. We don't know exactly what they're going to do. But the choice is either you're going to raise taxes on individuals or you're going to increase the deficit, because the envelope is not big enough to do it without one of those two possibilities. I think both of those outcomes are bad. If the outcome here is increasing the deficit by $1 trillion or $2 trillion, all that means is passing the bill on to our kids and our grandkids, which means that somebody sitting in a seat like mine 5 or 10 or 20 years from now will have to cut things like Social Security and Medicare to pay for it.
So you don't believe that cutting the corporate tax rate all the way down to 20% will spur economic growth in and of itself, which will help overall? I mean, growth, as many people say, is a panacea for a lot of ills.
So I think that our tax code is broken. We have the highest statutory rate in the developed world, and our effective rate is about average because of all the loopholes. I think it makes great sense to eliminate the loopholes in the business tax code, cut the corporate rate to wherever you can get by doing that. We thought you'd get to 28%. I think you could probably get to 26%. That difference is somewhere else because there aren't enough loopholes on the business side that you can cut. And then on top of the business tax cut, you've got the new loophole being created for pass-throughs. That's going to become an enormous opportunity for high net worth individuals to pay a much lower tax rate. That's just wrong, and it's very expensive.
Debt to GDP increased every single year under President Obama's presidency. Is there not room for it to increase a little bit more if it gives that growth that could then feed paying off the debts?
I think that whether or not you get growth from a tax cut greatly depends on how you do it. I don't believe that just lowering rates necessarily will lead to increased growth. There's an argument that things like more rapid expensing, making that permanent, would lead to more investment. Going from 25 to 20% actually rewards old investments more than new investments. So I don't think you necessarily get the growth. And by the way, some independent, even Republican analysts have said what I just said. The Penn-Wharton model is written by somebody who came out of a Bush administration and the president's alma mater.
Facebook shares reversing earlier gains in after hours, down about 1.7% there. The social media giant beating expectations on all metrics again, but attention's focused on lawmaker scrutiny into Russian-backed ads. Facebook CEO Mark Zuckerberg addressed the concerns on the earnings call, saying he is ramping up spending on security.
I am dead serious about this. And the reason I'm talking about this on our earnings call, top of the other investments we're making, that it will significantly impact our profitability going forward.
James Chakmak is equity analyst at Modus Crespi Hart and Company. He's on the line for us from New York. James, it's always good to have you on. So when you look at the numbers that we got out today, all certainly positive. Big beat on EPS, monthly active users up 16%. So why are we seeing the shares down in after hours?
Yeah, thanks for having me. Yes, you cannot find really any holes to poke as it relates to not only the user metrics, but also the monetization metrics. So firing on all cylinders there. I think that what you're seeing right now is just some questions on what is the model going to look like as we look into 2018. They are doubling up their entire security-related headcount from 10,000 to 20,000. You know, that is a lot of money. And when you look at the fact that the expense growth should be 5 to 10 percentage points growth, 5 to 10 percentage points faster in 18 versus 17. I think that's where some questions surface.
Yeah, I mean, there may be some investor concern over, this cloud hanging with Russian-backed ads on Facebook, but it certainly doesn't seem like advertisers stayed away as a result. I mean, looking at the numbers here, total ad revenue was up 49% in the quarter.
Yeah, absolutely. I mean, look, the way we see it is this. You have better than expected revenue and a steeper than expected revenue trajectory. And even when you factor in these additional investments, you're talking about a couple of $1 billion maximum, on a revenue base that's going to be somewhere in the neighborhood of $55 billion next year. And then when you talk about the margin implications from that, instead of posting the 67% margin that we saw in 3Q, it's going to be more along the lines in the low 60s, which is still exemplary for any internet company. So, look, these are the things that they have to do. Obviously, there's big scrutiny into big tech in general. the fact that they're being proactive, I think, puts them in a better place from a regulatory standpoint than perhaps.
James, you recently upgraded the stock from neutral to buy. You have a price target of $210. And yet, as we talk about some of these issues, especially with the ads and influence, not just from Russia, but concerns over other government influence in the future, I have to wonder that this heightens the regulatory risk. How are you weighing that in terms of outlook?
I mean, look, we've been weighing that for quite some time, which is why we've been on the sidelines for a while. But at the same time, you know, the way we see it is this. I think that the biggest risk, if a regulatory one were to have one, would be transparency into their algorithms, which would open up questions over their privacy. But the fact of the matter is, I think that the company is being proactive. I think that they're working hand in hand, obviously, with full transparency with Congress and in the congressional hearings that we're seeing. So, look, Facebook is a unique spot with the election and everything. But at the end of the day, I think even with all this going on, as long as they continue to be able to deliver on the top line as we've seen, and likely achieve better than expected earnings power next year versus the current consensus numbers, in tandem with a relatively attractive multiple, I think the stock still has momentum from this level.
James, very quickly, let's talk about the growth driver looking forward, because Facebook's made a lot of investments in video. You say that Facebook could serve as one of the top 2 contenders in sports programming. How do you see the platform's offering evolving as we look forward?
I mean, for video, I think that it's really going to be, as you see the pressures at traditional media assets, I think you have on one side Amazon really in a good position to win the longer form viewer content as in full games. I think Facebook is in a very good position to win the shorter form repackaged kind of highlights of those games. So I think Facebook is going to be a contender. But I just want to make one point, on all the investigations and everything going on, the thing you have to think about with the overall advertising market is that Google and Facebook are increasingly a duopoly.
Okay. Okay, James, unfortunately, we'll have to leave it there. We're out of time, but I appreciate your insight today. And the rundown will be right back.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. They're sharp. They help you get the maximum value for your money.
Market should be too worried.
I can hold on for the next 2 or
Growth
3
will be
years.
phenomenal.
Buy with a stop loss of
It is positive for the
It's
stock.
a marquee stock,
actually valued.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Divan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
Welcome back to the rundown. Let's show you the top stories we are watching this morning. Wall Street ends higher as the Federal Reserve says economic growth is solid, but the focus is on tomorrow, with a tax plan expected, and the Wall Street Journal saying the White House has informed Jay Powell he is the new Federal Reserve chief. In after hours, Facebook's earnings beat even the whisper number, showing no impact from controversy over Russian interference. And Tesla in reverse. Losses for last quarter come in worse than expected, and production issues for the Model 3 still a problem. Prosecutors have charged the suspect of that terrorist attack in New York on Tuesday with the deaths of 8 people. Lawyers say Saifullah Saipov provided material support and resources to the Islamic State and planned to kill as many people as he could. Meantime, President Donald Trump responding, saying he is considering sending Saipov to Guantanamo Bay, and he also wants to end the visa program that allowed Saipov to enter the U.S. legally. Blaine Alexander joins us live from Washington, D.C. with White House response. And Blaine, what kind of timeline is the president looking at in terms of changing this particular program?
So, Akiko, as you know, it took President Trump less than a day to call for this policy change. He says he wants to immediately work with Congress to end the diversity visa lottery program. This is a program that allows people from countries with lower immigration rates to be able to enter the U.S. by lottery system. It typically goes to people coming from African countries. Now, the president says that this is how the NYC terror suspect came to the U.S., and therefore it's a dangerous practice and something that he wants to stop. It's something that we had heard Republicans calling for an end to before this particular incident. Now, the president today speaking did not stop at calling for tougher immigration laws. He also called for tougher punishment, and he called for an end to what he called political correctness when talking about this subject. Here's some of what the president had to say earlier today, surrounded by some members of his cabinet.
I am today starting the process of terminating the diversity lottery program. I'm going to ask Congress to immediately initiate work to get rid of this program. Diversity and diversity lottery. Diversity lottery sounds nice. It's not nice. It's not good. It's not good. It hasn't been good. We've been against it.
Now, Akiko, many people are pointing fingers at the president and accusing him of politicizing a tragedy. One, because he tweeted out earlier today, kind of pointing fingers at Senator Chuck Schumer, a fellow New Yorker, but of course the top Democrat in the Senate, saying that he was instrumental in starting that policy in the first place. But also it bears looking at the juxtaposition between his response to this tragedy and his response post-Las Vegas. 3 days afterward, when he was asked about tougher gun laws, he said that it was too soon to start talking about that. Juxtapose that, of course, with several hours after calling for this policy change. Akiko.
All right, thanks for that. Blaine Alexander there joining us from Washington, D.C. U.S. stocks ended higher after the Fed said the economic growth was solid and signaling it was on track for a December hike. But the focus is more on